Matt, I'm Sean, the realtor guy from Portland, Oregon, and we're gonna really try to focus on the first-time homebuyers loan program in Oregon. So, our goal is to cover if you are a homebuyer in Oregon, you're going to hear all of these loan programs that are available, and Vince is going to give you short key points of those each loan programs. And the second part is Vince is going to explain which loan to pick. The third part is Vince is going to cover the FAQs from the home buyers because Vince has been working with the first time home buyers for like last 18 years. And then I'm going to ask Vince a tough question: how to pick the right lender, how to pick the right loan program, so that you can actually make the financial decision. That's one of the biggest. So you can be financially like advanced. You can do well in your the first home buying. So before I kind of babble more, so Vince, let's talk about the current available programs. And I'm gonna go one by one, and you can give me the like key points the home buyer should know. So what is Oregon bond below market interest rate and closing cost assistance?
Sure. Well, Sean, so maybe the first thing I'd preface is by saying, let me share very, very briefly my home buying experience and why I became passionate about serving first-time home buyers. So I bought my first home what seems like a long time ago. It was almost 20 years ago. But just for the folks out there, my first interest rate was 7.75%. So that's much higher than it is today. And I was terrified as well. So I still remember very clearly those fears, those stresses, and how it felt overwhelming, right? Even though prices were lower than relative to our income, then it still felt very financially overwhelming. So I understand that very well. And our goal, Sean's goal and my goal is to make it safe, make it feel safe, empower you with information, right? And one of the things I can share with you guys who are, just exploring this path is something that set me on the path as a mortgage professional to focus on first home buyers was that I found about all these local area programs after I bought my first home.
Mm.
It was upsetting and it felt like a betrayal to me. Like even people I trusted didn't tell me about these programs. So you'll find that, there's a lot of differences, especially when it comes to first time home buyers in terms of what's offered out there amongst lenders. It's not a commodity. Like not all lenders offer all these programs. So by watching this video right now, you're already taking a great step. You're empowering yourself, and knowledge is going to help you guys overcome that fear and feel a lot safer buying your first home as well as these programs.
Yeah, that's really a great point. So I'll try to ask you a question. To be honest with you, some of these loan programs, I don't even know what they are. Like MAP 100%. Oh,
Sure.
I'm not comfortable talking about it. That's why I refer the first time home buyers to lenders like you. But my first home was like 2005. I think it was like 6.25%. Yes, the price was much lower, but still home buying process can be pretty intimidating, especially the part that you keep hearing about how to pick the right lender. Make sure that you don't overpay, make sure you get the best rate. And I have my own sort of like a idea what I tell my home buyers how to shop for those rates, but we'll cover that at the end. And I'm gonna directly ask you that if you're buying a home in a state that you're not licensed to get a loan, how you're going to shop for the lender, how you will compare the rate, fees, and everything. So that's the end part. So stay until the end if you want to hear from. Uh, I'm thinking you're thinking in your brain right now what my answer might be. Maybe not. So let's go back to that the Oregon bond below market interest rate and closing cost assistance program. What is that, Vince?
Sure. So that's a great question. That's one of our legacy statewide programs.
Mhm.
It's been updated to be called First Home, just so everyone knows, right? And so you can still find Oregon Bond online, but that's a legacy program. First Home is the updated version that offers even better terms. And it's a statewide first-time homebuyer program are those who have not owned in 3 years. So we don't want to preclude our friends who sold our home in the past and haven't owned a home in 3 years because they're born-again first-time homebuyers in the state of Oregon. And this program is really important because it offers one of two options. One, both of them is a below-market interest rate. Okay, so to be clear, this outside of the scope of this call, but depending on your credit score or debt ratios or other application variables, you may not get the best interest rate marketed out there. So it may be even wildly below market interest rate, especially for people that don't have perfect credit. But what it does is it provides you a below market rate. As a context, it's usually about a full 1% below market. Okay. And then the other option is also a below market rate. That's only right now, it's only 1/8 of 1% higher. And it gives you down payment assistance to cover all your closing costs. I'm sorry, to cover all your down payment.
Oh,
So
down payment.
the minimum down payment for a normal loan is around 3 to 3.5%, depending on the loan type. And what First Home will do is, depending on your income, it'll cover up to 5% of the down payment. So there may even be money left over to help with closing costs,
Right.
which we'll talk about in a second.
Mhm.
So that's a great program in and of itself. And as you'll hear shortly, it's a toolkit loan. It can be combined with many other programs, such as other localized down payment assistance.
Toolkit loan. That's interesting concept, because I was reading your email about combining the different programs. So that's what you mean, right? Toolkit loan.
Correct.
Yeah.
Yeah.
Okay. So it sounds like it's something that if you don't have, I mean, if you want to pay the lower rate than the market rate to improve your monthly payment, this could be a good program. I mean, 1% full, 1% lower than market. That means what? It's like $500,000 home. Instead of 7%, it becomes 6%. The saving is, my rough guess is like $400 a month. So if that's your focus, that could be a good program.
Correct. And to be clear, that program is beneficial for any first-time home buyer who qualifies. It's not just for those looking for down payment assistance. Even if someone with 20% down would still very much like to have a below market interest rate. So it's a great baseline program to see if you're eligible. The way you're eligible is, again, you're buying in Oregon, you're a first home buyer not owned in 3 years, and you make under certain income limits, which depend on your family size, but they're pretty generous. I mean, just as an example, for 3 or more person household, it's almost 150,000. So pretty generous income limits. You have to make under that to qualify.
Right. So we'll put the link so that the viewers here can see the details of these programs, because there are probably about a dozen things that each programs need to cover. But today's video is to just give you overview of all these programs that are available in Oregon. So you'll need to continue the conversation so that Vince can maybe customize some of these things to best fit your best needs. What is conventional 100 financing? Because when I think about conventional, I think that 3% is the minimum down payment.
So without down payment assistance, whether with the loan, it is. You're correct on that. So a normal conventional mortgage for a first-time home buyer, you'll hear that 3% is the minimum. But then you can wed that with lots of different down payment assistance programs. All right. So when it says conventional 100%, that actually could take many different variations. Right. So we have a 100% program that provides you the 3% down payment assistance. But the first home program we just talked about also does that. This is where it could get confusing. There's more than a dozen different programs out there. So, our intent isn't to overwhelm. Our intent is just to know that we're, screening you for all these programs and helping you understand what is best going to support your goals. So conventional 100% financing could also mean other things. Like I wanted to make sure to talk about some localized down payment assistance. So, for example, the city of Portland has what's called DPAL, up to $100,000 down payment assistance. DPAL, down payment assistance loan. You can find that.
Vince, how do you spell that?
DPAL, DPAL.
DPAL. Huh.
So you can find some information on that at Portland Housing Bureau. If you Google Portland Housing Bureau DPAL, you find information on that. But to be clear, we approve you for an underlying loan. the city of Portland isn't doing the loan. We're doing the loan for you, and we wed that with First Home. So this is where we start stacking these programs, right? We have a below market interest rate, a First Home, then we wed it with the deep out of maybe up to $100,000, and that's a really great benefit package for a first-time home buyer. So I wanted to make sure to mention that, because that could all be under the heading of conventional 100%. Certainly, if you have $100,000 of down payment assistance, that's better than 100% financing. That's a lot of down payment assistance.
Mm-hmm. So I guess it could be challenging to really put together. I mean, you're talking based on what you just said. Each of these programs have minimum qualifications, and then to combine those two programs, maybe three, that means you're dealing with like 20 or 30 different variables or qualifications.
Sometimes.
That's a lot of brain power needed there. A lot of thinking, a lot of knowledge there, right?
Yes, and good thing you guys are going to outsource that to me.
Yeah.
That's
Wow.
what we'll take care of for you. So once I know about your situation, I can quickly articulate which programs you'll qualify for and which might be stackable. But now we're starting to understand that what programs you qualify for may depend on your credit scores. It may depend on where you're buying. Like, for instance, Washington State, we'll mention very quickly, has their own first-time homebuyer programs that are different than the Portland programs. And then, I know we're going to mention this already, but Portland has a down payment assistance. Gresham has a down payment assistance.
Yep.
Washington County does. Beaverton does. So we're here to help you, align you with all these different programs and see what best supports your goal depending on your situation.
Right. So that brings up the next one. Let's just talk about the Beaverton that Inhabit 25K down payment assistance. What is it? Give me like a few key points what the buyer should know about this one to use it.
Sure. So that's recently been enhanced to up to $50,000 down payment assistance.
I'm outdated. Yeah.
It's been increased to 50. And so that is for eligible first-time buyers, or again, those who have not owned in 3 years. The interesting caveat of that is you have to, in addition to that, you have to already live or work in Beaverton.
Oh.
So I'm often asking people right away, where do you live now, your exact address, and also where is your employer address, right? We would ask that on an application anyways, but I'm asking that pretty quickly in a conversation just to determine if that might be an option for you.
Interesting. It's both? You have to live and work there? One or the other.
In Beaverton. And you have to make under what's called 100% AMI, area median income, which changes for each household member. So, for example, a one-person household income limit is very different than a five-person household income limit. That's why we're not focusing on the individual income limits right now, because there's so much variation across the programs. But basically, first-time home buyer, make the income limits and live or work in Beaverton, and you purchase in Beaverton, you could potentially qualify for this $50,000 down payment assistance, and that also can be combined with the first home. So another stackable program. And to be clear, most of these programs we're talking about can be combined with all the different loans out there. Like if you're a veteran, this is an amazing opportunity for veterans. A VA loan is already one of the best out there. The only way to enhance it is combine it with a below market rate and then $50,000 down payment assistance. Or it can be combined with FHA. If your credit score is lower, FHA can be much more lenient. And help you buy a home. That can also be combined with all these programs.
So you said most of the loans are stackable. What are some of those loans that are not stackable, that cannot be combined?
That's a good question. So there, not all are stackable. So for example, there's another down payment assistance for Washington County. So we just talked about Beaverton, which is in Washington County, but Washington County in general has a down payment assistance of $30,000. That's not stackable with the Beaverton. They both have to be in what's called a second lien position. It's called a silent second. That confuses people, but it just means it's a silent lien on the home that doesn't have an interest rate or doesn't have a payment. But neither of those is going to go in the third lien position. This sounds like real estate geeky stuff, but so those two aren't stackable. It's either one or the other.
I see.
So I usually help people apply for both, because you don't know for sure if you're going to buy exactly the Beaverton city limits. Maybe you find something in Grove or Forest Grove, and so better to have assistance maybe regardless where you buy in Washington County, not just Beaverton.
Mhm. So I'm thinking. So this is a question coming out of realtors' mind here. I'm going to put my realtor's cap on. If using this Beaverton or Washington County loan is a must, like using that is a must, we may need to, or we do need to put that in the contract that maybe this purchase is subject to a buyer qualifying for a Beaverton $50,000 assistance program. I mean, I'm kind of stretching a bit here, but have you seen that before?
Um, not not typically. All right. So
Mhm.
that's more of a judgment call on the realtor's behalf, right? So I'll
Mhm.
defer to you guys. But so, for example, um, the Oregon, we're funding the loan for like first home. Okay, that's the first program we talked about. We're funding that, right? So
Mhm.
if someone is pre-approved, then that's not an additional contingency, if that makes sense, right? If we've
Mm,
already, so for example, you're for the folks listening, they might not know that you already have to put information about your financing in the contract,
right,
right? So
right.
for everyone listening, this is not that wild that you would suggest that. I mean, most first-time home buyers contract is contingent upon qualifying for financing. So what I'm saying is you don't need to say additional contingencies necessarily. Um,
Gotcha.
but that'd be up to you. In the case of the Beaverton program, since that's such large assistance,
Mhm.
if the person was qualifying, say, for a $500 purchase and they couldn't qualify up to that range without the 50,000, then yeah, you'd probably want to put that in there as a
Right.
contingency
That
for
would
the
be the
purchase.
contingency. Got it. And yeah, I mean, I like just basically disclosing everything like that. So it'll be good. Now, is that $50,000? What kind of form is it? Is it something you have to pay back? You or do you not pay back?
That's a great question. So all these different programs have, again, different forms or different variations of forgivable or non-forgivable. Okay, so there's not one universal explanation for that. It's program specific. So the Beaverton specifically is forgivable over a certain time period. So it's forgivable. It's totally forgiven after 15 years. There's no
Huh.
payment. There's no interest associated with it, but it doesn't begin the forgivability schedule until the 10th year. So
Interesting.
it's there on the home. And I'd like to speak to that because sometimes people knee jerk react and like, well, I don't want to take that assistance if I have to pay it back. And what I would suggest is let's look deeper into that, right? If my only ability to buy a home is to take free money
Right.
that they have to pay back someday, you haven't lost anything. You've gained everything, right? If
Hmm.
I sell that home in 10 years and I've developed $100,000 or $200,000 of equity, which means the portion of the home I own, but I have to pay back 50,000 of it, then I've gained $150,000 of equity. I haven't lost anything. So
Right.
sometimes before we truly analyze what that means, we think somehow it's not a good deal, and it's the best deal. We'll get free money, even if we pay it back someday.
What you said is basically using the leverage. That's what you can do in real estate. Without the leverage, you can't even buy it. So why are you complaining? That's what you're saying.
Exactly. And
Yeah.
and when you say leverage, it's nothing scary, guys. Like all mortgage loans are leverage. It
Right.
just means you have to buy a home on cash, and most of us never could or would.
Hmm.
But we'll use a loan, and that's called using leverage to control a large asset we otherwise couldn't buy.
Well, to me, the best analogy on that is like if you want to buy $50,000 worth of stocks, nobody's going to give you that, you know, uh, like 90% of the stocks
Mhm.
to buy stocks. So you have, there's nothing, no such thing as you put down 10% and buy the 100% of that, whatever, So that's what real estate does. Um, so that's interesting. That really I'm just thinking whenever I hear like loan programs like this, I think about certain people. Uh,
Mhm.
right now, there's a young person who's looking to buy first time home, and the affordability is like close to $300,000, and then she may have to liquidate some of her investment account in order to get the down payment. So something like this could actually help her as long as she stays there for 10 years. Then it sounds like it's prorated for forgivable down payment of that 50,000. If you live there for 15 years, you don't have to pay back That's what you're saying.
Correct.
Wow, that's pretty amazing. I mean, so 10 years. So that's kind of like getting like $3,500 every year or whatever for 15 years for free money for you to buy a home if you live there for 15 years.
Yes, it's 0%, zero payment money.
That's free money.
So if that helps you buy a home, then
Yeah,
it's a good thing. We can pencil it out every which way and find out that it's a good thing.
that just sounds good thing to me because I'm a firm advocate or kind of like you of doing that, buying the first home that turn into your future investment property.
Mhm,
And I remember talking to you about that like almost a decade ago,
mhm,
that you told me about house hacking.
mhm.
And I don't think you recall our meeting. I remember going to your Northeast office on a corner lot. I feel like, but it was like a house. Maybe you're still there. You told me about
That
house
was a long time
hacking.
ago, Sean. You're taking a deep dive.
I know you weren't expecting this,
I
but
think
yeah,
that was
you
2014.
that was 2014.
I think so. When I
Oh.
was in the office.
Oh yeah, you're in that office. So you told me about house hacking, and I do advocate that house hacking to anybody that I talk to. And
Mhm,
that's why I say, well, just don't buy too expensive one that doesn't turn into a good first investment property. Buy
mhm,
something more modest that's well rentable, and you just don't spend, so they save up some of that money for you to buy your second home. If you want to do house hacking in the next 2 to 3 years, that's a good way to like buy investment property. Now, I'm talking like a realtor here. Let me come back as a home buyer and let's go over some of these loan programs. But this is the beauty of long form podcasts. I think we can just dive into different things.
sure.
So, tell me about the Gresham Welcome Home 40,000 down payment assistant, please.
Cool. So also stackable. That can be combined with First Home, and it could potentially be combined with MAP. That's another program you mentioned, MAP 100% financing.
Uh,
I forgot to mention that the Beaverton was as well. So there's a lot of things going on here, guys. So that again, that's what we're here to help you through. But if you qualify, if you're a first home buyer or not owned in 3 years, or a displaced homemaker, they have this little exception in the guidelines for the Gresham program, displaced homemaker, and you make under certain income limits, which are based on what's called 80% area median income, based on family size. Again, it changes depending on each dependent. Then you could qualify for the $40,000 down payment assistance in Gresham if you buy in Gresham.
hmm.
And as I mentioned, that can be combined with First Home for the below market rate. It could also be combined with another program called MAP. What MAP does is it gives you 100% financing, which it wouldn't be if you had $40,000 down payment assistance. I recognize that. But what MAP does is it gives you financing with no mortgage insurance, even of less than 20% down. So again, might be a little bit outside of the scope of this conversation, but in and of itself, it's 100% financing of no mortgage. That's very rare. Typically, when you put less than 20% down, part of your mortgage payment is a fee called mortgage insurance. So the MAP waives that for eligible first-time home buyers. And then you combine that also with assistance and a below market rate, and that becomes a very nice benefit.
Let's talk about that map. What does that stand for?
Mortgage assistance program.
Mortgage assistance program. And who is running this program? Is like a
So it's a great question. So we're Guild is partnered with Portland Housing Center. There's only a
uh,
handful of lenders who are partnered with Portland Housing Center. PHC is the largest housing counseling agency in the state of Oregon.
mhm.
And within Guild, there's only 12 loan officers authorized to offer those programs. So there's hundreds of loan officers at Guild. So this is how even down to the granular level, the
Mhm.
loan officer level, you can see differences in programs you'd be offered. But at any rate, what PHC does is they fund what's called a community second mortgage. This is going to probably start sounding really confusing,
Way out
but
there. Yeah.
it's a second mortgage combined with the first mortgage we do for you that we always wed with First Home. So again, the toolkit loan, we're using like the below market rate of the First Home program
Mhm.
combined with the community funded second mortgage. So this is where it gets confusing. You have two mortgages, but neither of them are over 80% loan to value, so there's no mortgage insurance.
Gotcha.
And the interest rate on the second mortgage is below market. It's even lower than first home right now.
That's
So
rare.
you have a really below market rate
Mhm.
and no mortgage insurance. There's no way to get a lower payment with no money down. And that's just that program. Then you combine that with the assist with maybe the Gresham or the Beaverton program,
Mhm.
and it could become better.
The follow-up question on that is, where are the three cities? So I only see like Gresham, Beaverton, and Portland. They have those programs. It sounds like.
For down payment assistance.
Mm-hmm.
So not every metro region has down payment assistance.
Right.
So there's Washington County.
Washington County, yeah.
General.
Mm-hmm.
Their map is for Tri-County area, Clackamas, Washington, and Multnomah, and with exception criteria, Yamhill County as well.
Mm-hmm.
I forgot to mention that Washington County down payment assistance is also for Lincoln County and Yamhill County.
Mm-hmm.
First home is statewide.
First home is statewide.
So there's down payment assistance statewide for sure. We gotta see if you're eligible for it.
It's getting, I mean, there are probably like 50 different combinations or more. So now when you say 12 guild mortgage loan officers can do this stacking or the map or whatever it is, I'm already lost, by the way, Vince. So, but just, bear with me. So 12, you're one of the 12, it sounds like. And how many loan officers work at Guild Mortgage right now? Just roughly.
Off the top of my head, I don't know, but like our regional, so Guild is a national company. So
I didn't know that.
There's thousands of loan officers nationally. We're the largest purchase lender in all of Oregon and Southwest Washington. So we do more purchase loans than Rocket, more than your bank, more than your credit union, anyone, all those entities. So in just Oregon and Southwest Washington, that region alone, there's got to be hundreds of loan officers.
100. So you're talking maybe 10% of the guild, or maybe a little less or a little bit more, just about can only do some of these programs.
And my colleagues are really amazing people. I'm not suggesting that maybe there's not something I don't offer that they offer. Like for instance, there's guild loan officers who specialize only in construction lending. I'll be the first to say, I'm not a new construction expert. Here's my colleague for that. So this is something I've worked really hard to focus on and understand and be able to offer even at the loan officer level, not just the company level.
So obviously right now we're talking about the first time homebuyer loan program.
Correct.
And as far as I've seen in the last decade or so, you have probably offered most first time homebuyer loan program classes to real estate agents like myself. And I've seen you do it. I mean, for the last decade, I see your email once a month. I attend probably 2, 3, 4 of those probably every year. That brings up one point that I made before in different videos, is that like working with a lender who is offering most of these programs for the first time homebuyers is crucial, because if you talk to some other lenders outside of Guild or even some in Guild, they can't offer this, or they may not know about this. I mean, it sounds so to me, the realtors, we have certain rules that we have to know. But I have a strong feeling that some loan officers may not even know about some of these programs because they don't offer it, or their brokerages don't offer it. Am I looking at it correctly? So working with a lender who actually know all of these, that's one. The second is actually who can offer these programs. That sets you apart, so you can use more stacking of different loan programs to save more money and save monthly payment. Am I looking at it correctly? Did I state it right?
Yeah, you stated it correctly, and this might preempt our talk around. And I think that be concerned if you talk. I encourage transparency and everything, and there's times where a quote that's not associated with the first home buyer program, and maybe for some reason on that particular day I'm not as competitive, and I'll be the first to tell you that, right? I've never been in the business of talking someone into doing business with you if I can't numerically demonstrate why we're benefiting you, if that makes sense. So I encourage you to shop around, but what I encourage you to not do is just not avail yourself of these programs if you qualify for them, right? I mean, just because you have a friend in the lending business or your realtor referred you to their guy or gal doesn't necessarily mean that they offer all the programs. So just as I suggested, I encourage you to shop around. And if a program really does benefit you and that can be articulated by the lender, then that's a really great reason for them to earn your business.
Right. That's a great point. And as a real estate agent, I try to send at least 2 or 3 different lenders to potential buyers. I tend to do like one at credit union. My sense is that they have lower fees and pretty competitive rate. But then when it comes to a special programs or some of these like DPA, the down payment assistance programs, that type of things, I don't. I find that credit union might have some limitations because their lenders have certain set programs that they offer, and so you have to go to a bigger or more specialized lender like yourself for the first time home buyer, so that you can have all the very comprehensive options that you can compare with. Um, so I tend to do like one, and then maybe you, and then maybe someone else. And let's actually dive into the next question before we go through all this program. That I wanted to ask you how to pick the right lender and loan program and fees, as if you are going to Florida. You're going to buy something in Florida, and you're first time home buyer, but you have this wealth of knowledge because you've been doing mortgage for the last 18 years. Or let me put it this way: your kid. You have kid, right, Vince? Kids.
I have 2 of them.
2,
2
yeah.
kids. Yep.
So that's a good one. Your kid is going to buy one in Florida. How would you find the loan program for your kids?
Great question. So if they're first time home buyers, first thing I'm going to do is I'm going to find the largest housing counseling agency in the area. Like a large state may have several of them, right? PHC, Portland Housing Center, happens to be the biggest in the state of Oregon. And I'm going to contact that organization and I'm going to say, who in your experience offers the largest suite of first time homebuyer programs in our area, right? That entity should know, right? They're nonprofit. They're at the nexus of helping people buy a home with assistance on a daily basis. And the counselors, it's supposed to be their business to know all the different programs. And they often, I can't speak to every state, obviously. I do business in Washington, Oregon, but they often will be networking with lenders who specialize in first time homebuyer programs. So that's the very first call I'm making to local housing counseling agency, which you could do here, in the state of Oregon, called PHC. And then I'd research, just with a quick Google search, municipalities, right? Like if you Googled, I haven't done Gresham, I suspect that the Gresham Welcome Home link will come up, first page. Same thing with Beaverton Inhabit. So it might be down to the city level. And then, I would, if I had a trusted realtor, I would ask them, John or Mary, you're my realtor. You want what's best for me. Now that I'm a first time home buyer, please give me clear direction, right? I know you have lots of lender relationships who specialize in first time home buyer programs. And if they don't, then maybe that's okay. That doesn't mean they're a bad realtor just because they don't have maybe they don't work with many first time home buyers, but if someone specializes in first time home buyer programs, that might be a better fit, or at least definitely someone I want to talk to on behalf of my child before just going to like a credit union or on the online lender.
So so that's it. Do you have more?
Well, that's probably a lot of legwork for you right there. You got to make a bunch of calls and do some googling and
Yes.
then follow up on different lenders your realtor
Right.
referred you to. But that's definitely where I'd start.
Mhm. So
Um,
so calling the largest housing counseling agency centers in the state or in the county or city and
right, correct,
find out which brokerages or which lenders offer most of the programs. That's one thing. The first time homebuyer
correct,
program. The second thing is Googling down payment assistance program in that city or the county or the state. So you
yes,
can kind of, yeah,
right,
I've, and then the third one is ask around the like realtors or people who are in that industry
right,
if you have a network of people and find the one that
right.
specializes in the first time homebuyer programs. Now, that's the part of just gathering the lenders numbers and
Hmm.
data. Now you got four of those.
Hmm.
You got four contacts, and the next question on that is how would you ask them so you can compare the rates and the fees and what is the best way to do it. So to give you my sort of like feel to is that ask them on the same day same day, but don't have them pull your credit. You don't want to pull
Right.
credit more than once or twice a month, otherwise your credit gets hurt. So without doing a credit pull, without doing anything like that, how would you compare who offers the best loan programs, fees, and rates?
It's a great question. So a lot to unpack there. First, we do everything with a soft credit pull. My mortgage team. I can't speak for everyone at Guild, or certainly not all lenders, but everything we do at the pre-approval level is a soft credit pull. So it's not going to have any impact on your credit. So your advice is absolutely sound if lenders doing hard credit pulls, which a lot of lenders do, because a hard credit pull can decrease your credit scores, which could increase the interest rate you pay. So we do everything with a soft credit pull, so there's not a concern there. But in terms of interest rates, what you guys listening may not understand is, to all of our great disappointment, trust me, us in the industry, interest rates can and do change on a daily basis.
Right,
So if you got a quote from a lender last week and you're comparing it to someone this week, that's not appropriate. You're
right.
not comparing apples to apples. So what I've found makes people feel the most comfortable, and I don't know what else to say to make them feel more comfortable and be more transparent, is I say what I've already articulated to you guys. Feel free to shop around as many lenders as you like. Send me their quotes. If I can beat them, I will tell you why numerically and demonstrate that for you.
Mm.
If I can't, I can't, and then be more transparent as lender than that. Like I the mortgage industry is highly regulated. There's no lenders out there that can or should be putting like fake fees on anything, right? And that would be revealed later on. So we're just going to tell you if we can do better.
Mhm.
Here's why. Here's X, Y, Z. But I think it's important to share those quotes because what's the consumers get confused all the time, right? This
Right.
is kind of a deep dive here, but like the way a lender assumes about property taxes could literally dollars.
Yep.
I won't mention any names, but you've heard of these online lenders. They'll have commercials in the Super Bowls and things like this. Okay,
Yep.
and I see them quotes all the time, and they send quotes that are wildly inaccurate because they don't understand how property taxes are collected in Oregon. So they're not necessarily putting a fake interest rate or fake number on there, but they're representing their closing costs as thousands and thousands of dollars less when it's
Right.
totally inaccurate. Meaning,
Well,
by the time you get in contract and get a formal estimate, the truth is going to be revealed, right? So that's why just let us walk through the quotes with you so we can show you apples to apples.
so I remember one deal, the lender was from Washington State, and he didn't know about the Washington County transfer fee. So
Mm-hmm.
that closing cost was different at the closing, near the closing, and it ended up, costing that lender to pay that because
Right.
he didn't add that into the estimate or the final. So now that's I'm going to reframe that, and I'm going to ask you slightly differently. I mean, you basically answer as a loan officer. that you're going to send me those quotes and I'm going to beat it. So on the consumer side of things, when I put my, the first home buyers cap, I'm going to ask, so do I then ask each other's lenders quotes to the different lender and have them compete on the same day? Is that how you would approach for your kids in Florida to compare the fees and rates? Or would you have them ask them to, hey, here's one I got from, from yesterday. I know the rate might have changed, but what do you think? And then on top of that, one more thing is that a lot of times sometimes buyers send me two different bids or quotes from different lenders. When I try to help them compare, sometimes it can be challenging too because the fees names are different. Some call it this fee, but then they call it something else. So going back to helping your kid in Florida, and how would you determine, oh, I like them all. I like all four of them. They communicate well. They offer most of the first time home programs, and they gave me this thing, but they gave me on different dates, so the rates could be different. But then how would I know who's giving the best deals?
Well, ultimately, you have to make a choice. We agree on that, right? So we need to make a choice. And you bring up a good point. You really need to make that choice before you're in contract. If you want to switch lenders after you're in contract, that can weaken your offer. I'm not saying you can't do it, but that can weaken your offer.
Yeah.
And this is selfish, but it's good to have integrity. If you told a lender you're going to work with them and they're doing work on your behalf, and then you didn't tell them you were going to work with them and they're still doing work on your behalf, you've harmed them. So that might not be here or there to consumers, but if you're ethical, you should choose before, so people aren't doing work on your behalf that aren't going to ultimately work with you. So how do I conversation with him? And if I know, like, and trust all four of them, I'm going to have to decide who I know, like, and trust more, and who looks the best, right? Or who I believe is going to ultimately lead to success, right? So this is a sticky question for people. I'm glad we're getting into it, right? And I'm trying to give you the most transparent responses I can. Like, for example, you and I both been in the business for almost 20 years, right? And we know that if there's a no-name internet lender on your pre-approval, a lot of listing agents are going to look down on that. It doesn't matter how good a quote they gave you. And the listing agent just had a bad transaction with the internet lender. Maybe it doesn't matter if the quote is great, right? Or the quotes provided online may not be what shows up. So there's something to be said for who do I believe? Do I believe a guy in a call center in New Jersey, 10 states over, or do I believe another guy or gal who has all these local reviews and is a local lender? I know where they sit, and I know where they live, and I know the people who referred them. That's kind of important question too.
Well, I think you just brought up more of a intangible. That's very intangible. It's very, they call it the gut feeling, right? Or the reputation of a lender in a local community. That's intangible. If a realtor is listing agent, he had a bad experience with you, putting your name will potentially make my offer weaker. Vice versa. If they had a great experience, if they took your classes, oh yeah, he knows what he's doing. He's going to close on time. When he says you're pre-approved, that means you're actually pre-approved and all of that. But the question that I was asking was more of a mechanical side of things, comparing the numbers, so kind of give you a hint here or maybe a direction here is that my understanding is comparing the APR that includes fees and the prepaids of that loan can maybe reveal which loan actually saves more money on the interest rate, which loan program actually shows less fees or higher fees. Am I heading the right direction here to compare like
Well,
different
yes or
loans?
no. APR is supposed to be a representation of the total cost of loan over time.
Right.
And the calculation for it is not like a 1+1 = 2 calculation. It's never revealed to the consumers because it's a very large calculation. But the
Mm-hmm.
problem with that is like different lenders will or will not include different fees in the APR. There's not,
Oh.
and you would never know that as a consumer, right? There's just not apples to apples.
Mm-hmm.
Or a couple more examples. So, for example, APR doesn't show if you're getting $100,000 down payment assistance.
Mm.
APR has nothing to do with that. So I go to an online lender and their quote unquote APR is better than mine. Are you going to go with them even though they're not offering $100,000 down payment assistance? I mean, so
Mm-hmm.
there's a lot of situations you can say blindly looking at APR alone is
Mm-hmm.
definitely not the best case.
So it's
And
really
and
hard to
then
do. Mm-hmm. Yeah, go ahead.
well, it is hard. I'm agreeing with you that it's hard because like just because you're not supposed to doesn't mean there's not misrepresentation with interest rates.
Mm-hmm.
So anyone who's a homeowner will attest to this. To this day, I still get letters because I have 6 mortgages because I've house hacked, like you mentioned, right? I bought homes as a primary residence. By the way, what does that mean, guys? You buy a home as a primary residence, you get little to no money down, the best interest rate, and the disclosures say you only need to live there for a year. After that, you can rinse and repeat. That's the only reason I own 6 properties. I wasn't a rich guy who had 20% down on every properties, right? So I have a bunch of mortgages, so I get a bunch of solicitations, and to this day, every month, at least a lender who's a company, it says Guild Mortgage.
Mm.
Guild Mortgage offering a special incentive for a below market interest rate. It's completely illegal,
Wow.
and yet it's still done every day in the country because the FTC can't regulate all that,
Mm-hmm.
right? So just because it's written down doesn't mean it's real until it's what's called on a loan estimate and a CD.
Mm.
Those are formal
Let's
quotes,
see that.
right? The
Right.
online quote is meaningless, right?
So getting.
So
Mhm.
it is difficult,
Yeah.
but again, I go back to what I say, like it'd be very difficult to have two quotes side by side of me going through it with you and somehow lie to you and manipulate you to tell you mine was better if it numerically wasn't. Does that make sense?
Mm-hmm. Mm-hmm.
I'm certainly not going to try to do that. So uh, I think you're asking how does a consumer compare all these quotes? Maybe they can't.
Mm.
They're not right. Maybe they can't. There's a lot going on. That's why we need to. But I think most licensed loan officers aren't going to lie to you if they truly can't do better. And if you have two quotes side by side and you ask them just to go through it,
Mm-hmm.
the
Oh
truth
yeah.
will be revealed. So
See,
that's probably what I would do.
so that's what I was looking for actually. That makes sense to me. Side by side explanation of your program and the other competitors one that I just got. That's I think a
Right.
very fair way to compare it. And when you do that to multiple lenders, so you say you got 4 lenders, you basically shift each other's bids to the next lenders and say, hey, can you compare yours with me so that I can understand it better? Make this apple and orange comparison into just apple and apple comparison so I can actually compare. And I think an ethical, like a hardworking lender who want to earn your business will patiently explain that to you. I think well, they added this fee, they call it this, but it's almost the same as what we call it this, and based on that you should be saving on the fee side maybe $550, but then on the monthly payment side you might be paying like $35 more a month because of their have a higher rate. So kind of give you that breakdown.
Mhm.
So that answers actually a huge question for me because I've been telling the first time home buyers basically ask on the same day same situation, give you the same scenario and see who give you the best deal. But then there's so many different details. Like in the beginning, we just went over about half a dozen of different loan programs. Some lenders would be able to offer it, like people like you can actually talk about these things. Some of the other lenders may not. So with comparing with the different loan programs, there's no way to really do the mechanical, the mathematical comparison. That's what you basically told me, and that makes a lot of sense to me. By the way, I just wanted to make a quick point here. As I mentioned, well, this is me as a realtor talking now. That, like I mentioned, there is no other lender that I've been in contact with that know of each other or know personally. I want to say to whoever watching this, Vince has actually had most loan program knowledge that I've seen. Vince is locally. I mean, you probably do like a what, at least a once a month classes to realtors, right? And so I just wanted to make a point of that.
Twice, 2 to 3 times.
2 to 3 a month. So yeah,
I appreciate that.
that's one thing that I can say for sure. I don't think I've seen any other lender who talks about the first time home buyer as much as you have been, and talking about different programs, so many variety of different programs that you talk about. Um, and as a consistent putting the classes out there for realtors, you probably, yeah. I mean, maybe I'm like a algorithmic biases here because I'm like already subscribed to you and your title company email address. That's why maybe I'm getting it. But then again, that's not a fair comment because all other lenders and title offices have my email address too. They can invite me too. So yeah, I mean that's something that I can comfortably say to whoever watched this, that Vince actually has the most programs that I've learned the most from probably, and he can. The other part is more important part is knowing or having these programs available as your toolkit, but somebody who has the brain power to combine the knowledge into kind of infusing that into a good loan program for individual situation. That takes intelligence, I think. And as you guys saw, I mean, Vince can go over these details and think about different scenarios and having knowledge of local knowledge of if you live or work in Beaverton, that $50,000 down payment assistance program. I mean that alone. I mean, yeah, many lenders might know, but can they offer, and can they customize that? Yeah. So I just wanted to make a point of that. So um we're not selling here. I'm not selling here. I'm just making the facts here. So you make your own decision, shop around, talk to different lenders, but give us a call if you want more of a comprehensive available loan program explanation and be able to make your own customized loan programs. Now, coming back to the sort of like wrapping up this live video. By the way, there's one person said hello, but if you guys have any questions about what we talked about or anything in Oregon real estate, just go ahead and type in, please. And if you put in the comment, I'll do my best to answer. If I don't know, I'll call Vince and answer your question, your specific questions. Now, I do. I did wanted to go over all of these programs. Let's see, but uh, well, we don't. I know you have to go soon, but and let's see. I wanted to. Hmm,
Well, I can mention a few more
yeah.
if
Yes.
that helps.
Yes. Please do.
If you're a vet or active duty, you probably know about the VA loan. But I just want to suggest the VA loan can be combined with many of these programs. And also, there is a specialized Oregon veteran loan benefit called ODVA, Oregon Department of Veterans Affairs loan. That's not a federal VA loan. So again, like almost every single veteran I serve was pre-approved by a large online lender. I won't name, but They're, I think they're the largest online veteran lender. And the reason I earn their business is because obviously that large national online lender has never heard of First Home, or they've never heard of any of these local programs, or they don't offer the
Mm,
ODB. So again, even if you're not a first time home buyer vet, it's still important to, talk with a lender who has these programs that may enhance VA financing. There's also USDA financing, which is not for first time home buyers, although many people who use it will be first time home buyers. That's for rural areas, but it's not just like wildly rural, like anywhere west of Hillsborough qualifies for it in Washington County. And
yeah.
lots of Clackamas County does. And it
Mhm.
offers 100% financing, really good terms, and it also can be combined with many of these programs. So if you've been approved for USDA, but no one mentioned any programs, that might be an opportunity for second opinion.
Mm.
There's renovation loans that can allow you to buy a home that doesn't qualify for normal financing. That's helped some people in this market where, they're not finding a home in their price range, but they're willing to make an offer on a fixer, and the only way they could buy that is with a renovation loan, and that could help achieve affordability. Um, and so we've covered the main ones. We've covered the MAP, we've covered the Beaverton, we've covered the First Home that's statewide, we've covered the Gresham program, Washington County program. So the takeaway is that there's definitely something for the entire state of Oregon and the entire state of Washington. We didn't cover that much, but there's different homebuyer programs for Washington.
Mhm.
And, you know, even if you have a down payment, it's still really important to look at the options, right? So let me explain why real quick, okay? In my experience in 20 years of doing this,
Mhm.
most of us, myself included, we come into the home buying situation thinking the only thing that matters is interest rate and or payment, right? But we completely ignore the other side of the equation, which is actually more fundamental to you and your family's financial security, and that's the cash.
You
For
you
instance, I was
gonna
just working
sorry, Vince. You kind of got cut off there. Did you say cash?
the cash side of the
Cash side of the equation. Okay.
cash. So,
Mhm.
so, so let me explain. We're helping a gentleman right now. He's a TriMet bus driver. Called me. He was pre-approved with the online lender, and they didn't do anything wrong, but they didn't offer him any programs. And his agent had him call me because the agent came to a class just like you, and he said, "No, I'm just heartsick over having to liquidate my retirement.
Mm.
Don't want to liquidate retirement. I'm scared about doing that." And very quickly, I determined he qualified for a program, and I put those two side by side. I'm like, here's what you're going to do with online lender, which we can do too, 5% down, right? But that robs you of all of your savings. Here's this down payment assistance. You're putting no money down. Yes, the payment's a little bit higher only because you're putting no money down, but you get to keep your $40,000 of retirement. And bingo, he's in contract. That made him feel safe, right? So think deeply about what truly makes you and your family more financially secure. Is it a mortgage payment that's $50 less a month, or is it retaining all your savings? So that's another reason that APR can't capture those important variables, right? What truly
Mhm.
makes me feel safe, and a slightly lower APR may not do that if it's a lot more money out of pocket.
That's pretty huge, dude. That explains quite a bit. That's amazing. Um. So yeah, I mean, I that's where I wanted to point out in your email, by the way, if they want the real world holistic counsel on the biggest purchase of their lives, how to maximize the opportunity and financial security. That's what you wrote on the email that you sent me about this loan program email. That's what it is. And I think that's where maybe paying a little bit more on the fee, maybe $200 to get this counsel may be worth it. Because I think the cash reserve side of things, and especially when you have to touch that the retirement account to buy a house, you need to think clearly on that one because that's like your retirement savings. You want to put all that into the house, and that's where I think talking to people like you, in my opinion, who can understand the math with the mortgage in more broader way, and understanding the cash position of individual family, what kind of stress they can put on I mean, that's really important, I think. And the other side of things is ultimately, when you said that national lenders don't know about this Oregon First Home programs, it kind of clicked in me. Yes, maybe they're quoting you some of this lower rate, but then you have to pull out your $50,000 from your investment account to go with them, and not knowing about the first home program that you could have used, and combining with a VA loan that you could have, the ODVA, the Oregon Veteran Loan, then you just lost some of the benefits that you could have used. And so that alone right there is, I think, you just raise the bar for the local lenders who know these local programs that the national lenders, the football commercial lenders, will not know and guide you through.
We're going to be wrong. Don't get me wrong. Their commercials are going to be great. I can't wait to see them during the Super Bowl. But they're not the best to help you with your first home purchase.
Yeah, that's amazing. So yeah, I appreciate your time, Vince, and I think we had,
Appreciate you too.
yeah, and I mean, I'll try to make these short videos from this one, but the last thought that you want to share, um, if you have any like FAQs that you want to share with the first time homebuyers who are watching this, to wrap up this about 1 hour video, what the first time homebuyer should think, look, anything that we didn't cover in today's video, or we reiterate the importance of things that we just talked about.
Yeah, I'd like to reiterate that I empathize. It feels like a scary situation. It feels overwhelming. I still remember that 20 years ago. It sounds like we bought our home almost the exact same time. I bought in 2005.
Yeah, that's
But,
a five two.
in Alberta Arts, and it was really scary. My home price was $250,000, but at that time that was a lot of money, guys. I didn't think I could afford it, but so I remember being scared, and I used 100% financing. My rate was 7.75%, so I can truly identify with what your fears are. And what I could say is the thing that helps you overcome those fears is knowledge. Sorry about that. Another call coming in, so
I I love it. Live video, guy. Live video. This is amazing. Your
live
phone
video.
just fell down.
So what I'd say, my experience was a lot of reluctance to call and talk to a lender, and um, don't have that reluctance, especially if you're watching this video. I'm like, hopefully, you've seen I'm an approachable guy. I'm going to talk to you, about reality, right? And you're going to know within 10 minutes exactly how you qualify for a mortgage, right? I mean, I'm very knowledge focused and knowledge based individual, right? Like, and so that can help you know exactly what the variables are and know exactly how to position yourself to be in the best position possible. So I'm happy to have those conversations. You don't need to fill out an application just to have a conversation with me.
Mm-hmm.
And even if you don't want to buy now or you never buy, you'll know exactly what the variables are instead of wondering, do I qualify? What do I qualify for? Is my credit good enough? And we can answer all those questions for you.
Mm-hmm. So you can take care of some of the fears and give them the facts. What other states are you licensed in? Do you have any other states?
Oregon and Washington.
Oregon,
Oregon and
Washington.
Washington.
Yeah, that makes more sense. After we talked about the national lenders not knowing everything, I mean, if you cover all the other states, you probably wouldn't have the mental or brain capacity to know all the local ins and outs of these state
No way.
programs.
No way. That's one of the reasons I mean, a lot of my colleagues are licensed in like 5, 6, 7 states.
Mhm.
It's a full time job just staying on top of the first time homebuyer programs in Oregon and Washington.
Is there such thing as like a lender designation for first time homebuyer, like a certificate or anything like that that you can talk about, or is there anything?
I wish there were, Sean. You come to my classes. I don't know if you've noticed, but my very first slide, it says first time homebuyer evangelist.
Uh,
I have to admit that's a made up designation, guys. But no,
what?
there's no.
Oh,
I am a CMPS, which is a certified mortgage planning specialist, and a
Oh.
CDP, which is a certified divorce lending professional. But those are the only two real professional designations besides your being a licensed loan officer.
Yeah. Yeah, I'm not licensed in Washington because I just physically can't go there sometimes.
Sure.
And so,
Mhm.
and I have some knowledge up there, but not as good as in Oregon. So, well, let's wrap it up. Thanks everyone for watching, and I hope that our 1 hour video gave you a good starting point of how to shop for a loan, what to look out for, and all the Oregon programs that are available in. So this should be a this I hope this is a good starting point. That's all I'm trying to say. And if you I'll put the link of Vince and my contact information, and feel free to leave a comment if you have any questions, any concerns. We don't bite you if you call us. We're just here to help people, whether they buy now or 10 years from now. In 10 years from now, we may be retired, but until then, until we don't retire, we're here to help. So give us a call and ask any questions. And Vince, again, thanks so much for your time.
Thank you, Sam.
I think
Appreciate
this
you.
was a lot of fun. I learned a lot. I made a bunch of notes, as you can see, um, and I'll try to make a blog. And then let's do some, other videos with the follow up questions and everything. So,
Anytime, Sam. I
all
have a
right.
great time.
Have a
Thanks.
great day, sir.
All right,
Bye.
take care. Bye.